How do you actually make money in the stock market? So, to make money in the market, you need to follow a very simple principle. And if you adhere to this principle, it'll serve you well in this business. So, the principle is buy low, sell high. That's it. That's how you make money in the market. Now, when it comes to financial markets, people tend to do the opposite. They tend to buy high and end up selling low. When markets are falling and stock prices are down, people tend to be fearful. But this is when the real money is made. Now, let's explore this concept in more detail. So, share prices don't move in one straight line. Instead, they sort of ebb and flow. They move in a rhythm. So, your job is to buy low and to sell high. Warren Buffett put it across more eloquently and he said, buy good businesses at good prices. All he was saying was buy low and sell high. Now we're going to explore this concept of P&L. P&L is short for profit and loss. So say the current share price of a company is $400 and you think it's a fair price and you like the company and you decide to buy the shares. So $400 becomes your entry price. So now what happens is if the stock price goes above 400, you make a profit. However, if the stock price goes below 400, you make a loss. So you see how important the entry price is, the price that you pay for the shares, because it determines how much profit you make. Now we're going to switch over to the charts and we're going to look at a practical example and we'll see how you actually make money in the market. All right, so now we're going to look at a practical example of this concept of buy low and sell high. So we're going to look at Amazon and we're going to use a simulator and we're going to buy some Amazon shares. Okay. I know if you're looking at this chart for the first time, you're probably thinking, what is going on? Why are there so many numbers? But don't worry about it for now. In a future video, I'll teach you how to analyze these charts. All right, so we're going to buy some Amazon shares. All right, so let's say we're going to buy 20 shares of Amazon. Okay, so we're going to click buy and the current share price is 195. So this becomes our entry price. Okay, so we said anything above our entry price is a profit. And anything below our entry price is a loss. Okay, so now we're going to click play and we're going to see how the market actually moves on a day-to-day basis. So I'd like you to pay attention to this box here. All right, it's going to show us our P&L, our profit and loss. All right, let's hit play. All right, so just going to pause it for a second. So this was our entry price, 195, and the market kind of went in our favor for a bit, and then it went against us. Now, it's very rarely the case that you buy a stock today and then tomorrow, it goes to the moon. Usually, what happens is sometimes it hovers around your entry price, and sometimes it can go below your entry price. It's just something that happens. It's really, really difficult to time the markets. Okay, so now we're in a floating loss of about $400. Right, I called it a floating loss because until you actually sell your shares, the profit or the loss you make is called an unrealized gain or loss. Okay, so this means that until you sell your shares, this profit you're seeing here is not actually real. So that's why it's called a floating loss or floating profit. It can be the case that at one time you could be in a floating loss of 1,000 and then the stock goes in your favor. Okay. So what some people do is if the market is going against them, they panic and then they sell their shares. But then after that, the market can just literally go in their favor and they'd have lost out on all that gain. So now the market is going in our favor, which is good. That's what we like to see. All right, so up about 700. Okay, so some people, they're short-term traders, short-term investors. So they literally are in the market for maybe a few weeks or a few months, and then once they make a certain amount of profit, they sell their shares. But some people, they're in it for the long run. They'll be like, yeah, I'm gonna hold this for 5 years or 10 years. So it really is up to you. I think in markets, you just have to do what works for you. Alright, so I'm just gonna pause it for a second. So you see around here, when the market came up here, I think our floating profit was around 700. Okay, and now it's down to like 400. So this is what happens in markets. I think one of the hardest things is knowing when to take profit, because at one point you could be up 1,000, but if you don't actually sell your shares, it's still a floating profit. So you could be up 1,000 at one time, but the market can literally go down to your entry price and even go below your entry price. So at one time you could be in a profit and you can end up making a loss or be in a floating loss. Okay, so knowing when to take profits off, that's one of the hardest things in trading. Alright, so now we're up about 1,000, but I want to turn your attention to something that is happening here. So you see this area, this level here around, let's call it 237, 238. Alright, so we're going to mark this level and we're going to change the color. Let's make it red. Okay, so you see the market came to this level. This was in Jan, right? So the market came to this level and it pulled back. And then again in July, end of July, the market came to this level again and it pulled back. And for the third time, the market came to this level again in September and it pulled back. Right, so you see the market is struggling to break above this level. So this level is called a resistance level. Think of it as like a price ceiling. Okay, so this is really the importance of this kind of analysis, is you can see these levels. Okay, so if you've bought down here, right, and you're seeing these levels, right, it's a good place to take some profits. It's a good place to take some money off the table. Okay, so this is really the importance of this kind of analysis. This is called technical analysis. Okay, right, so we're up about 1,000. We can choose to take all our money off, or you can choose to take half, but I'm just gonna take all of it off. All right, so we're gonna close our position there. We've booked 1,000. Okay, but we're actually gonna see that the market is actually gonna come down. It's not gonna stay up for very long. All right, so you see, so the market tried to break above this level and then it couldn't, and then it came back down. Okay, so this is a very, very key level. Right, so now earlier we said some people do the opposite of buy low and sell high. So some people end up buying high and selling low. Okay, so this is what happens a lot in crypto. People come late to the party and they end up buying at these highs, and then the market goes against them. Okay, but what we want to do is we want to buy low. We want to buy in these areas here. Let's make it green. Okay, so we want to buy low. We want to buy in these areas. Very rarely that you'll be able to catch, the bottom, but around these areas here is where we want to buy. So this is buying low and selling high. So now, once you learn this type of analysis, if someone says to you, "Oh, there's a stock that you should buy," okay, so you can come and you can analyze it yourself, and you can see, if you see that the market is, in these kind of areas where it has like a price ceiling, it'll be a smart move not to buy. Okay, you want to wait until the market. You want to wait for it to like pull back and come to an area where it's finding support. Okay, so in the next video we're gonna learn how to actually analyze these charts. This is called a candlestick chart, and it's very, 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 very useful. Now it should definitely be part of your analysis. So I hope you found this video useful, and if you have any questions, you could drop them in the comment section. Like, share, subscribe, and I'll see you in the next video. Cheers.